whatever the alphabet soup program that they come out with, it all does the same thing. How do I keep the money in the system? And so how do I get out as an investor? And that's, for me, is crypto. And that's why I think that this cycle is going to be insane and people don't have enough imagination for how crazy things can get.
Wait a minute, everyone. Welcome to Bitcoinzilla, your platform for daily cryptocurrency analysis and news. Our mission is to keep it simple. Bitcoinzilla offers engaging information that is easy to understand. Our analysts keep their eyes on the latest news to provide valuable insights via email. Don't miss out on this opportunity. Join our community of 10,000 subscribers and experience the new edge with Bitcoinzilla. Subscribe now. In today's video, Real Vision co-founder and CEO Raoul and Arthur Hayes discuss the macro big picture framework, where all this crypto wealth will end up at the end of this cycle, and how to save your future. So without wasting any time, let's dive into the video.
Nobody gives a fuck about a 5.5% hurdle rate when the asset goes up 100 or 200% a year, right? It's irrelevant. You know, if it's a secular trend like crypto or tech, interest rates don't really matter.
Well, crypto and tech companies don't need banks. So who gives what their interest rate is? Apple can fund its CapEx, Google can fund its CapEx, Microsoft can fund its CapEx from retained earnings. The price of money doesn't matter. But if you're some widget company in Ohio, well, you're not getting any loans, especially not from a regional bank that's not too big to fail. No loans for you. You're suffering. But you're not going to see that because no one cares about the S&P other than the 7 companies that power all the returns, which are all tech stocks that don't need banks. And obviously crypto, the whole point of crypto is to disintermediate the TradFi banking system. Of course, we don't care if there's no credit from TradFi coming to crypto. There never was. So again, this whole notion that a 5.5% on Fed funds is restrictive is fugazi.
And for me, I know the government's probably thinking, great, we've got everybody contained. I actually think a bit reverse. It's a Trojan horse. Because once you start to learn about this space, as you know, you go down a very, very deep and long rabbit hole and you realize why you're doing it. And before you know it, then the ETF doesn't make sense for you anymore because you want to diversify. So how my mental model for these ETFs is we got crypto land and fiat world. And this is just a trade deal between the two. So hot money flows. If you think of VC as FDI and you think of this as hot money flows, you know, it's just a trade deal. For me, it's like this is as big a deal to me as China opening up after the WTO agreement, because we've got now a free trade agreement essentially between them, well, relatively free.
Bitcoin returned to $70,000 after the March 29 daily close as traders counted down the final hours of a roaring Q1. Data showed old all-time highs at $69,000, forming tentative BTC price support into the weekend. Bitcoin gained around $1,000 in the latter part of the day, seemingly aided by comments from Jerome Powell, chair of the United States Federal Reserve. Speaking in an interview at the Macroeconomics and Monetary Policy Conference in San Francisco, California, Powell appeared cool on both inflation and the economic outlook. The Fed, he stressed, was not in a hurry to enact interest rate cuts, a key event for risk assets. Growth is strong right now, the labor market is strong right now, and inflation has been coming down, he said. We can, and we will be careful about this decision, because we can be. June is currently market's favored bet for the first such cut to take place, with 61% odds of a 0.25% reduction at that month's meeting of the Federal Open Market Committee, or FOMC, per data from CME Group's FedWatch tool. March 29, while a Wall Street holiday, also saw the latest print of the Personal Consumption Expenditures, PCE Index, known to be the Fed's preferred inflation gauge, match expectations at 2.5%. Considering the hurdles for BTC price action next, attention continues to focus on the weekly, monthly, and quarterly candle close. For popular trader and analyst Direct Capital, $69,000 was as significant as ever. A close above would mark Bitcoin's highest ever such close. BTC is going to continue whipsawing and zigzagging within this weekly range until the weekly candle close, he predicted on X. Weekly candle close above old all-time highs of $69,000 gets Bitcoin closer to a breakout. Anything else in the meantime is consolidation.
So there was a paper written by this guy at Columbia, Columbus, I can't pronounce his name, and it was about fiscal dominance. Basically, the federal government has issued so much debt, the spending is so high versus its tax receipts that any sort of notion of independent central banking goes out the window, and the central bank becomes the tool of the federal government to pay the bills, right? And if you think about what the problem is for the banking system is, okay, we know all this inflation is coming. We know that we're going to be forced to buy these bonds, and we know that's going to ding our profitability. But there's this escape raft, called crypto. And if people really latch onto this and they say, hey, why do I have these dollars, euros, yen, yuan, whatever? Let me go buy an asset that's outside of this whole system, and then I'll just sit back and watch the fireworks. That's not good for the banks. They're not going to make any money on that. So, what do they do starting in 2023? All of a sudden, the Winkle clowns, they try to get an ETF approved for 10 years. Did the Lord's work for 10 years trying to get this ETF approved in the U.S. Still don't have one, by the way. And Larry Fink, within 6 months, gets an ETF. And so TradFi says, okay, this crypto thing works. There's obviously this zeitgeist of too much federal spending. I mean, Jamie Dimon rages on about it every quarterly report. Oh, yeah, the U.S. is spending too money. U.S. is spending too much money. Well, instead of them getting fucked by them being forced to buy bonds that are negative real yielding, well, let's have a product that we can throw our clients into and make fees that's still within the system. And that's why I think these ETFs are now being embraced, which is, hey, here's this crypto derivative. You don't actually get to use Bitcoin because you can't withdraw it. You can't even redeem it. You want to redeem, you get dollars back in these ETFs, not Bitcoin. And so it's just a way to put all these people who want to get into this crypto life raft, but don't want to put in the real work and deal with private keys and, OPSEC and all the things. I mean, it's annoying, but again, freedom isn't free. And here's this ETF. You can subscribe to it through your retirement account, your pension fund. You can buy it on a stock exchange. You've got all these, respectable looking folks selling this to you now, saying this is a way to diversify against inflation. And the banking system reaps fees. And we've seen how successful it's become. So I think there's going to be a Bitcoin ETF, an Ethereum ETF, a Solana ETF. Regardless of what any politician says, the banks know this is their way to stave off the effects of being forced to buy these bonds that are bad deals for them.
According to American investor and hedge fund manager Mark Yusko, the price of Bitcoin, the largest cryptocurrency, could potentially surge to $150,000 this year. At press time, the flagship cryptocurrency is changing hands slightly above the $70,000 level. During a recent interview with CNBC, the hedge fund manager touted the cryptocurrency as a superior form of gold while explaining his bullish case. Yusko is convinced that the price of the cryptocurrency could end up surging much higher than $150,000. In fact, he has predicted that the flagship coin could surge to as high as $700,000 by the end of the next decade. The investor's bull case for Bitcoin appears to be largely based on the upcoming halving event, which is expected to occur next month. Despite the fact that the bellwether coin has already seen a massive rally following the approval of several spot exchange-traded funds earlier this year, Yusko believes that a bigger rally is going to happen after the halving event. He has pointed to the fact that the price of Bitcoin tends to peak months after the event based on historical data, which means that some fireworks are to be expected by the end of 2024. Yusko has been a long-time Bitcoin bull. For instance, he predicted that the price of the largest cryptocurrency could hit a whopping $400,000, all the way back in 2019. In 2021, he said that the Bitcoin price hitting $250,000 would be the monetary value of gold equivalents. Earlier this March, the largest cryptocurrency surpassed silver by market cap, after its valuation hit $1.4 trillion. However, it still has a long way to go until it manages to catch up with the yellow metal. The cryptocurrency is also yet to surpass major companies of the likes of Alphabet and Apple by market cap. And do not forget to subscribe to Bitcoin Seller. The most important news will reach your inbox on a daily basis and for free. I do not know why you have not subscribed yet. If you like the video, give it a thumbs up and subscribe for more daily updates. Remember, knowledge is power, and we're here to empower you on your financial journey. Until next time, happy investing.